Let's kick off on your view on the Dangote flour acquisition by Tiger Brands, buying 63.5% of the company for $188 million. Firstly, is this a game changer for the Nigerian milling and baking industry right now? Overall, how does this increase competition in that space?
Well, I think it's a game changer for Tiger Brands because they'd already made two smaller acquisitions in South Africa, but this is the really big one. Dangote, of course, is not just in flour. Dangote is in cement and in sugar and in lots of other commodities. In fact, this year it's probably going to be producing 28 million tons in Nigeria alone. So by buying a two-thirds share of Dangote flour, I think Tiger Brands is showing that it wants to be part of this flour market in Nigeria. And Nigeria is the flour production hub for West Africa, not just for consumption in the country, but elsewhere. We've also seen very heavy investment by flour mills of Nigeria as well. They just announced $200 billion worth. So I think looking at it, it's part of a general expansion in the area and more generally a recovery in Nigeria's agricultural sector.
As you say, I mean, there has been a huge investment overall going into the agricultural sector in Nigeria. But beyond that, let's talk about some of the other grains and the outlook for prices right now. Because just looking at that wheat price, I mean, huge spike in July, and it's kind of been trade at range bound for some time. It's still up 28% year to date. What are your views, firstly, on that wheat price and the outlook going forward from here?
Well, I think the real concern generally about grains is the lingering impact of the drought, particularly in the USA, but also we've seen some very poor outturn figures for wheat in Europe, the Black Sea region as well. Now maybe the focus is shifting towards South America as well. So generally, there is far more demand than there is available wheat out there. And of course, it's not just wheat, it's soybeans. So I would have expected that these high prices will continue. We really need to get some good news before we're going to see them coming down.
Another important development in the soft commodities space is the settling of farm gate cocoa prices in Cote d'Ivoire and Ghana. Starting with Cote d'Ivoire, that price settled at 725 CFA francs per kilogram, and of course that 27% lower. Do you think that they've got the balance right now when it comes to that price?
Well, the reality is that the price they've just set in Cote d'Ivoire is actually higher than it was last year. The problem in the past is that Cote d'Ivoire has set what they call indicative prices, which are what you're supposed to pay at the farm gate, but very few people did. And for the last few years, these prices have been getting closer and closer to the international price. In fact, last season, it was only about 10% below the average futures price internationally, which meant there was no money left for anyone else to make a profit. So local buyers were refusing to buy. This year, by being more realistic, by setting a price which is lower, it's actually about 15% higher than the average that farmers were actually getting last year. And of course, there's the added benefit that hopefully local buyers will actually pay this price. And the government is really trying to enforce it. Just a couple of days ago, they arrested 3 local buyers who they claim were not paying the acceptable price. So if it works, it should actually mean that we see going forward enough money to go around everyone, and also farmers getting a fairer price than they have in previous seasons.
And just looking at the cocoa price, the average cocoa price sitting down 6%, in fact, month to date, sitting down 16% year to date. And when we talk about Mali and Burkina Faso, they've kept those prices for the new season unchanged, but still relatively high, when you look at it compared to international prices. How's that going to affect cotton companies?
Well, I think it is a real concern going forward because the cotton prices in Mali and Burkina Faso have been well above the average international price for the last 2 seasons. Currently, they're sitting about 40% above the cotton price. And if you take the Cotlook A outlook price, we would expect that over the next few months, it will come down further, close to its 10-year average of 77 cents a pound. So I think going forward, the worry for the main cotton company in Mali, CMDT, and also Sofitex in Burkina Faso is that by the end of the season, they'll have paid out a lot more in money to farmers than they're going to get back for the cotton they sell internationally. And again, we'll be looking at financial problems in the sector. The problem is it's such a political issue. If you set a price far too low, the farmers complain, and obviously they're a powerful lobby. But if you set it too high, it's just not a viable industry for the buyers and the traders. And you get standoffs, and ultimately everyone loses out.